Hey, welcome everyone. It seems to me that I had not done a YouTube video in a while since we went out to the San Francisco Money Show and gave presentations on futures trading and algo strategies. And again, this is kind of a wild market event. And I said, we're stuck in the middle with you. Clowns to the left of me, jokers to the right, stuck in the middle with you. Trivia question. If you want to answer that on the YouTube, just type in what the name of the group was. And you probably can Google it and figure it out. But anyway, again, where are we going with this market? The Algo Optimizer, Algo 17, we've had some pretty fantastic days around here. Not taking every single trade because obviously we've got some mixed market dynamics like trends that happen overnight, but currently short. Yesterday gets out of half position, trails a stop, gets in, max barred out. Overall performance is just doing a really excellent job. And again, we're doing a webinar on the Algo Optimized program. Short positions here from Friday, really caught some good trade strategies there. Quick long, got stopped out, thank God. But man, this thing is just absolutely firing on all cylinders. Nice little trades, little tiny givebacks. But other than that, man, performance is fantastic. That's just a 15-minute model. Crude oil has been doing pretty decent as well. And we see the gold market currently, and here's our board right now: VIX, SPY, SPXL, gold, ES, that's short still. Let's see, crude oil long, giving up, I don't know, this is an interesting performance. This let's take a gander at performance here in the marketplace. We've had some absolute weeks trading two lots. This is what this model is. People would die for this type of performance. And again, my premium services, and I want you to know, I'm doing YouTube videos to help give you guides as to what tools are kind of helping us in these markets, how we're using the Algo 17 optimizer to maximize this volatility in the market. But I also run a business, and I have an advisory service and a live trade room, which you've always been invited to sign up for a free trial to the room. What you would see is this in front of you each and every day. Live signals, live trades happening as they are performing. And by the way, since I've been talking, we just covered half the position on the profit. So the profit target was just covered half the position. Short 2, out of 1, and now it's going to trail the stop on the balance. We'll see what happens there. Where's the market going? Bottom line, advanced decline work. Let's take a look here. We have a specialized look-see at the market, and I know this may be hard to sound, but we'll fill you in here. A lot of traders are looking at the VIX, and I'm a big VIX trader, at least the VXX. We've been on this program trading VXX for, 3-4 years now, at least. And we developed the Algo program in 2016, so we've got 3 years there with algo programming. Every time someone got the algo person's algo program, we had GBTC for Bitcoin, we had VXX, Spider, and Gold, and another, I think, an E-mini program, a workspace that we provided. So VIX is not anything new. We've got, what makes the VIX such a dynamic product is that it trades off the first front contracts of the futures. And the futures trade off of the VIX. The VIX is an index that is based on the valuation of puts and calls on the Spider, the S&P 500. 5 strikes up on calls, 5 strikes down on puts. So if you think about everything, it's a derivative of a derivative of a derivative of a product that's based off a derivative of options, which is the options based off of the spiders, and the spiders is all created by what? What's the value of the S&P 500? 505 stocks. And by the way, trivia question. There's not S&P 500. I think it's 505 stocks in the S&P 500 right now. So you want to look at the breadth of the S&P 500 if you're trading in the VIX, right? So wouldn't that make sense? And that's what we're doing here. In our live trading room, if I go back and I share this with you, you'll notice we have the ES 5-minute, the Spider 5-minute with the actual breakdown of advancers and the S&Ps with the decliners. We opened today with one of those student body lefts where we consistently are doing this. We have 420 stocks higher open. The next day we have 420 stocks lower on the open, and that's that volatility that we see in the market. It's not important how the market closes, or opens. It's how it closes. Last Thursday, at 3:55, the advanced decline was at 321. Within less than 5 minutes, the advanced decline went to 235 on the close. The next morning, China came out and announced they were imposing tariffs. Let me tell you something. Somebody knew. You can't sell off 100 stocks, 20% of the S&P 500 in 5 minutes on no news. Somebody knew. But anyway, it also proves a point. That's about the third or fourth time this year we've seen dynamic moves within the window of the last 2 minutes of trading. So system algo traders and institutions are pushing buttons right up until that time period. So if you're trading in futures and you're an option trader, I'm sorry to say, here's the clue. You need to literally wait the last 96 seconds of the minute of the day. That's the most important time frame of this market environment right now. Over time, gang, another observation is if we close, and today we had a situation where we were almost closing positive with, or we opened positive with a positive breadth reading in the advanced decline. The Russell still continues under water pressure. We've got the advanced decline that's trying to break out to the upside in both the S&Ps, the Qs, the Dow, NYSE. Now, I don't know how we're going to close today. I don't know how we're going to close this week, but I will tell you, I'll let you know on the close. But if we close another day positive or so, or at least we have a series of moving averages here. You can see, and I'll share the Dow first, all right? So we've taken the cumulative advanced decline and used a series of moving averages, just like price. It's another data point that you can take a moving average of. If we're trading stocks, here's the clue. If you're trading stocks, don't you want to look at what the advance of the breadth of the market is doing? And what's the breadth of the market doing over time? So if the short-term moving average of the breadth is above the longer term, it's more positive, right? So when you get these moving average crossovers, in this case, we got the yellow line over the blue. That's positive. So when we get these positive breakouts, like over here, which occurred back in June, signified a nice buy signal. But notice that the market went sideways. So I got a couple little examples here of when we get a moving average crossover like we had over here in March. The market went up, and then it had a nasty little sell-off. So look here in my crosshairs, and you'll see that's a nasty little Dow sell-off, right? What did the moving average do? It never crossed. So while price was able to capture maybe shaking of the tree and maybe a false decline, getting a lot of people out of their stocks or get false sense of security or false signals, right? The overall advanced decline, longer-term moving averages never crossed over. But when they do cross over, they do generate sell signals, right? So like you had over here, there's a moving average crossover right there. But then it crosses back and gives another buy signal. And when it does, boom, positive things happen. So I think from a leading price indicator, that's the point today. We're seeing markets being played with up and down, back and forth to biblical proportions. And there's a lot at stake in this game. This is no longer a little slight hang on for a 1%, 2% move in 6 months. These are 1-2% moves in equities with historic valuations every day. That can wreak havoc if you're not positioned well in the market. My personal style of analysis, day trading, we look at short-term analysis for a specific reason. But for position trading, we need to be very aware of these breadth readings in the marketplace. And until we get that moving average crossover, it doesn't tell me to be expressly bearish, but I need to be cautious because those little downdrafts can be hurtful. So anyway, that's the other side of the coin. The last thing I want to point out is we have this little moving average combination. This is a proprietary volume indicator. It takes a percent change of volume and does a momentum indicator. So it's a lot more, it's more sensitive to the reflection of volume trends in the marketplace. And so as you can see, when a price goes up, there's no volume behind it. Or at least when we get a new high in price above a prior day's high and you get a volume divergence, meaning the indicator here was higher and price today is higher than price, but volume indicator is lower. That's the indicator divergence. The point is, it helps to give better insights that is a valid sell signal because the market rallied on weak volume and it's susceptible for declines. All right, so you got a nice trade out of the game today. Yesterday, the inverse was true. We had volume upticking and generated a nice little buy signal. Advanced decline was rising yesterday, and so therefore, great buy signal. On again, off again. I'm going to leave you with this. If late in the day, we maintain structural strength, meaning if the market finds support late in the day, late in the afternoon, 1:30, 2 o'clock in the afternoon, no more general time frames. President Trump's generally been tweeting stuff out in the morning session, 1:30 in the afternoon. By then, press conferences are done, so we'll get more information. But in the afternoon, the advanced decline in the S&P 500 is north, key number, north. And I'm going to write this down. We talk about this in our live trading room all the time. if this number, which is just the advancers in the S&P 500, is greater than the number here I'm writing down, 320. That's a specific number. There's a reason for it. We talk about it in our live community. If the advanced decline in the afternoon is greater than 320, that's expressly positive. Now, if it's got close greater than 320 after the 4 p.m., 4 o'clock, not 3:55, not 3:45, 4 o'clock close, that number has to be greater than 320. That's what I want you guys to follow up with. If it is, that puts another posting of positive breadth in the market. What happens between 11:25 on Tuesday, turnaround Tuesday, and 4 p.m.? That's anyone's guess. Right now, my algo strategy is short the market. It covered one of the short positions. It's still short. You can see it right here. This particular trade short from 92 and a quarter. We're 76 and a quarter. The one lot is up $812. So on that position. But with that said, I wish you well. Sorry for not updating you guys in this last turmoil. We've been really busy with our premium services and keeping our clients at bay. But I definitely did not want to ignore for you guys that have visited the YouTube channel, seen what we do, and you have posted some good likes. There's always those guys that don't like things, and that's great. And if you don't like something, don't watch it anymore. More importantly, if you don't like it, tell me why. Man up. That's all it is. I know this is a free society and freedom of speech, but you know, if it's my personality, shit, I got a real big problem. So don't. I've already had dislikes on that from the day I was out of high school. So anyway, other than that, as far as technical analysis and as far as trading and algo strategies, that's a different story. Anyway, thanks for watching. And by the way, if I don't have anything up in the next few days, don't get mad either, because we got this little thing called a Hurricane Dorian coming into West Palm Beach projection. So we got to batten down the hatches, tie down the boats, blah, 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 all this other stuff we got to get prepared for. Here's a bit of irony, and I'll leave you with this. I got procured tickets to see the Rolling Stones, greatest rock band in history. The Rolling Stones. I mean, Mick and the boys and Keith and Ronnie, and they're all good friends still with Mick Taylor, original guitarist back before Brian Jones died, but anyway, or after Brian Jones died. I got tickets to see him for the opening act, April 20th, right? Mick has a little heart issue. They cancel the show. I hold the tickets. I was taking a good friend of mine, and Dr. Jeff. Some of you know Dr. Jeff. I was taking Dr. Jeff. They canceled the show. I said, okay, they rescheduled the show for August 30th, Saturday. He can't go. He's got to go somewhere. I think he's in France, south of France, and enjoying himself there. What happens? We got Dorian coming. So is the Rolling Stones going to play at Hard Rock, or am I going to see him, or did Jeff luck out and went to Provence? Those questions will all be answered by Monday, Labor Day weekend. With that said, carry on, folks. And remember, stops are your best friend and option strategies also. And more importantly, as far as an indicator is concerned, the advanced decline is probably one of your greatest asset tools in trading the equity markets. Take care. Thank you for watching.